The Pension Fund Regulatory and Development Authority has often spoken in the past about introducing a minimum guaranteed return scheme along with the national pension system. In an interview with Business Standard, Supratim Bandyopadhyay, chairman of PFRDA, revealed that the scheme is likely to become operational early in the next financial year. He said that the minimum guaranteed return would be a variable return. It will be reset every year and will be linked to the 10-year GSEC. The scheme will also come with a 10-year lock-in. Watch this interview as the PFRDA chairman fleshes out the details of the minimum guaranteed return scheme and also talks about some of the other major initiatives of the PFRDA at length. Good afternoon, sir, and welcome to our show. So we are approaching the end of the calendar year, and we thought this would be a good time to catch up with you and talk to you about many of the initiatives that PFRDA had spoken about, you had spoken about during the year. My first question is regarding the number of subscribers in NPS. What is the latest figure on the number of subscribers in NPS, and at what rate has it grown year on year?
The number of NPS subscribers, if you take all the sectors together, central government, state government, all autonomous bodies, and then obviously non-government sector also, the corporates and the all citizen model, which are normal retail customers. So all taken together, the latest figure, I believe we have collected somewhere around 17th of December, just 4 days old. That is about 1.25 crore. And out of that 1.25 crore, the broad bifurcation is like that. 83 lakh comes from the government sector, whether it is state and central. And balance 42 lakh comes from corporate and the all citizen. All citizen is about 16 lakh, 26 lakh, and corporate is 16 lakh. So that is the broad this thing. So 1.25 crore NPS subscribers as of now.
Okay. And PFRDA plans.
Of course, you asked about the growth rate.
Yes.
Growth rate, I can tell you, the corporate subscribers, they have grown by almost 22% year on year. And the individual subscribers, all citizen, there the growth rate is much higher. That is about 37%.
Okay. And PFRDA has proposed to launch a guaranteed return scheme. So has this scheme been finalized? When will it be launched? And what will be the expected rate of return?
What we have done, there was a discussion almost 1 year long, and why it took so much of time is because this is the first scheme of this nature which will be floated in Indian market. And not only that, we have scanned the overseas markets also. Hardly any such scheme is running today. Because in a market related scheme, we will also know that giving a guarantee with this underlying volatility is very, very difficult. So it took a lot of discussions from fund managers as well as our consultancy firm. And along with that, we have a pension advisory committee. There are also 2-3 actuaries are there. So those actuaries also, we got it involved in an expert committee, and some actuaries from different sponsor companies of our pension funds also, they participated. And a result of which we came to a final structure which was put up to the board on yesterday. Yesterday was a board meeting. So the on a couple of points, there is still discussion going on, and hopefully in another 7-10 days time, we'll get the board approval. But basically, I can tell you, every contribution will have a lock-in of 10 years and the guarantee will be valid for 10 years. But the guarantee is not a fixed guarantee, it is a floating guarantee. And it will be linked to benchmark to 10-year GSEC, because we are choosing a 10-year period. So 10-year GSEC we thought is the best benchmark that we can take, and which more or less everybody understands, and which is auctioned in the market every week. and it is very liquid. So getting the yield curve and all those things are very, very easy and easy to follow. So normally on yearly basis, there will be a review of the guarantee. Suppose if I give a guarantee of 5% today, that will be valid for 1 year, and thereafter, after 1 year, normally it will be reviewed and reset if required, either upwards or downwards. But in between, if there is a major event which really affects the yield in the GSEC market drastically, then obviously in between also a review can happen. Like we have seen a pandemic coming, and that time also markets were quite volatile. And similarly, we have seen instances, because we have studied a scenario of almost a little over 2 decades, right from 2000. There are cases within 1 year, between 2008 to 2009, the yield variation was as high as 4%. So these kind of anomalies also can take place. So in between a year, if the variation is so high that the guarantee is not sustainable, then obviously the PFRDA has to intervene and reset the guarantee. Otherwise, at yearly interval, it will be done. And it will be something which will be little less than the 10-year government security. Today, if you look at the government security annualized rates, whatever is going at, it will be close to, say, 7.5. Maybe it will be 7.3234, but that is half yearly. So annualized is close to 7.5. So we are keeping a margin of anything between 2.5 to 3.5%. So board will be giving this thing to the chairman to decide, depending on the market situation, whether it will be 2.5 or 3.5. If we put a 2.5, then the minimum downside guarantee is 5%. So if it goes beyond 5% under any circumstances, the fund manager has to make it good. Okay. And if it is go above 5%, the entire compensation or upside goes to the subscriber. So subscriber should not think only about the minimum guarantee which is given. It can be more than that also. Under circumstances, there will be, like today, if you look at the 14-year CAGR of GSEC fund alone, it is 8.7. It's a long-term track record that I am talking about of PFRDA, not any other fund manager. So there are definitely chances where it can go up. And how we are compensating the fund manager, that they are taking this additional risk of giving the guarantee, which was not there in earlier NPS or API products, is that we are compensating them by giving a higher fund manager. So this way, we are trying to see that the fund manager also gets little more compensation for the kind of risk that they are taking. And this is the first time it will have a bearing on their capital adequacy. Because today we allow them to run with a minimum capital of 50 crore, as it is the norm in mutual fund industry. Because these are pass-through entities, they get the money, invest it, give some kind of return, and that is the end of the story. But the moment you ask, not only you have to give the return, you have to ensure that this is the minimum return. So under any circumstances, if they have to meet that, obviously that becomes little challenging. So for that, maybe they will require extra capital. So for the first time, like insurance companies, we are bringing the solvency norm, capital adequacy norms. So like insurance companies, if the liabilities in a very layman's term are of rupees 100, you have to have a minimum asset to cover that liability, which will be 150 rupees, 1.5 times. So similar capital adequacy regime also we are bringing in. So they will be also under a lot of pressure to give that guarantee. So considering that, we are giving that compensation to them and upside also. So hopefully in next 10 days time, if board gives the approval to the final proposal, we'll be now discussing with our central record keeping agencies and fund managers. Of course, we have given them advance intimation to set up the system because it requires a different system for uploading the NAV, reflecting the NAV, and all those things. Because the current system caters for normal NAV calculation, which is just like mutual fund. An evaluation file comes and thereafter we do it. And not only that, here also we have to see that we are able to manage the minimum benefit. So this may take another 4 months kind of thing. So maybe early part of next year, 23, 24, this will be launched. Because we want to see that it is launched when everything is ready. Otherwise, if the systems are not ready and the product is launched, then what will happen? Money will flow in, but will not be able to maintain those things the way we wanted it to. And secondly, I'm not telling this is going to be a very foolproof product or the final product, but always when you are launching something for the first time, you have to test the ground, test the market. By launching this product, we'll be testing the market, seeing how the response is coming, and thereafter, if the product needs some tweaking, that will be done at a later stage.
So you will be launching it early part of next financial year.
Early part of next financial
For the
year.
next 10 days, what
Yes.
will happen then?
Next 10 days, the final board approval will come. It was discussed in the board. Board members had certain suggestions, so those suggestions are getting compiled. And we had a discussion with the ministry, DFS also today. So once their final suggestions come, all those things will take together and give the
So there will be new fund managers for this scheme or
No,
the
no.
existing?
The existing fund managers will manage these schemes. And actually, when we give license to these fund managers, there is a clause which binds them to give this kind of a product as and when it is launched. So now that it is getting launched, so all the 10 fund managers will be open to them. And initially, it will be open to only non-government subscribers, only for the reason is that if any new scheme or new product is to be given to the government employees, their government has to issue the notification. So once government issues notification, and we'll be requesting Government of India also to issue the notification, and to different state governments to issue the notification for the same. As and when they issue the notification, it will be applicable to their employees.
So basically, currently we have these funds like E, C, G, and A. So now we'll also have a guaranteed return fund. Is that it?
Yeah, no.
Is that how it will work?
Fund is, see, there is a little difference. Fund is the investment instrument. On that basis, we are talking about these ECG funds. But these are basically schemes. Like we have a central government scheme, we have a state government scheme, we have a APY scheme. Similarly, there will be a guaranteed scheme. It will be a different scheme, and underneath which there will be a component of equity, corporate bond, or government security, whatever it is, because we are giving little free hand to the fund managers also for managing this product. But our consultancy firm, they have suggested an ideal kind of a investment management regime, where they are telling large part of VSEC, which is being put here, should be properly back-to-back hedged by separating the coupons and this thing, principal part. So if you do it, your capital requirement will go down drastically. But if somebody does not want to do proper hedging, maybe their capital requirement will be more. But we are giving that liberty to the fund managers and telling them very clearly, if you go for a partially unhedged kind of a policy, maybe your capital requirement is going to be more. So please take care and go ahead.
Okay. So recently you also made changes to the withdrawal form. The withdrawal form also became the annuity proposal form. Could you speak about this initiative, please?
Because for some time we have been watching that as and when people are going out of the scheme. And, you will be surprised to know it seems NPS is a recent this thing happening only, but already 1 lakh people they are enjoying annuity. They have gone out of the scheme because maybe there are early retirements and maybe people who are there in government service, they were absorbed in those cadres at a higher age. So within 10-15 years also people are going out. So when they go out, the normal system says that since they are going under another regulatory regime, because annuities are given by life insurance companies which are managed by or regulated by IRDA. So again, they have to submit a new form, application form, KYC documents, everything. So we have been discussing with IRDA for quite some time, and recently in July, we had a one-to-one meeting with the IRDA Chairman himself, Mr. Panda, and with some top annuity providers. And we told them that if you give this kind of a facility, that helps our people. Because our people have no other option. They have to take annuity only. And again, you will be surprised to know, almost 4.5 lakh people are retiring in next 5 years from the system. And that will generate annuity business of not less than 11,000 crore. So I said that all the annuity service providers, they also have really interest in this because they are your captive customers. They live here and they go and join with 40% of their workers. So in that case, if you make this exit process little smooth and seamless, that will help. So now, I think September itself, after that meeting, they have issued that instruction, and it is now becoming easier. Whatever KYC they do at PFRDA level and the exit form that they submit here, that is taken as their entry form, without them going through another round of application, KYC and all. So that becomes easier for people.
Another announcement that PFRDA made this year was to allow investors to change their investment pattern 4 times in a year. Has this been implemented? And why have you made this change?
Actually, we are also getting stakeholder feedbacks, especially from big corporates and all that. That's those who are aware about the markets, they want a little more flexibility. See, so far as flexibility is concerned, already there is a lot of flexibility, and we thought that, okay, we can give one more facility here by giving them 4 times choice. How many people will ultimately use it, we do not know really. Because enablement in the system is one thing, and people actually enjoying that benefit is another thing. And whenever 4 times they are doing, only one word of caution I want to tell about those investors, that this is not a equity investment that you are doing for a short time and this thing. This is a long-term investment. So whatever decision you are taking today, let it be there for some time till you really can assess the effect of that choice. And thereafter, in a year, every 3 months or every 2 months, if you keep on changing 4 times, I do not know whether this is really good for that. But for the sake of enabling, we have enabled in the system. If somebody wants to do it, they can do it.
So, does the change in investment pattern refer to asset allocation?
Yes, yes, yes.
Can
Exactly.
one also change the pension fund manager 4 times?
Pension fund manager, we have only allowed one time.
Once.
Thereafter also we'll see if it can be more than a... But this is only related to same pension fund manager, but different fund allocation. Yes.
You have also spoken in the past about allowing withdrawal from NPS via systematic withdrawal plan. So, could you tell us about why you feel this option should be made available and what has been the progress on this front?
We have seen that the annuity rates are going down drastically, and of late, it was as low as even 6% at one point of time. So now people who are used to the NPS returns, which is 9% plus, sometimes more than 10%, they say that when I am getting it accumulated, it is more than 9%, 10%. And when I'm getting annuity, it comes down to 6%. So we have been talking to IRDA, and as I said, we had a joint meeting. So we requested them to revisit the annuity rates, and if they can feel, because it is a technical requirement from their side, if they feel the capital requirement for annuity plans also can be brought down. So to that extent, if the capital requirement is less, they can give better rates of return. So these are technical areas they are seriously looking into. But so in that process, we thought that why not? Let us have one more exit option, which we'll call systematic withdrawal plan, where they say that exactly how much amount they want every month. And accordingly, that much amount will be paid from the accumulated corpus, and balance will remain with us and we'll keep it invested. And over a long period of time, that will be allowed to be withdrawn. But it requires a change in the Act, and at that time when we had discussed, that Act was under active consideration, but now actually the final result has not come, so it will be difficult for me, because our final recommendations and whatever we wanted, everything is given. But with that, I want to add one more thing. So technically, systematic withdrawal plan is not there, but there is a window that customers can still use to draw that 60%, which is the tax-free withdrawal at the point of exit, over a period of 15 years. So it can be termed as a modified systematic withdrawal plan, because we have said that you need not take that 60% at one go. And we have asked CRAs to promote it, to popularize it, because many people, they may not need that 60% at one. When they are retiring from a government service, like maybe they will be having a gratuity, they will get their GPA. All these things are given in lump sum, and they will get a good amount through your leave encashment. So when you get all those things, on top of that, you may not need 60%. And that will have maybe sometimes creates a problem of plenty. Too much money, you don't know what to do, and ultimately you put in FD or you put in your bank account or liquid mutual fund, and it does not give you the right kind of returns. So we are trying to popularize it even more. But as and when the Act gets amended, all these things will be rectified. But that is again in not our hands. So we are in discussion with the ministry as quickly as possible if it comes. Because now our Act says that they have to exit only through an annuity.
So PFRDA was also planning to introduce a variable annuity product. So could you tell us a little about what is a variable annuity product? What are its advantages for investors? And what is the progress on this initiative?
The annuity product, annuity itself, by nature of it, under the Insurance Act, only insurance companies can do. So basically, the discussion was with IRDA that instead of a fixed annuity, whether they can think of a variable. In the latest discussion in July also, we have told annuity service providers and IRDA chairman also that if you can please think about this. Because variable annuity is nothing but it is a sort of a inflation-linked annuity. Currently, these kind of annuities are not available in the market. But only thing is that the name itself suggests normally annuity, if it is 6% guaranteed, under every market condition, it will remain 6%. But in case of a variable annuity, like our variable guarantee that I have talked about, so it will vary according to some benchmark, and maybe this will be inflation. Whether it will be CPI or any other this thing, that is another thing. But if you take the inflation, I believe the retail inflation, which is CPI, that is a better measure of the inflationary pressure on people. So if you do that, to that extent, I believe the inflationary pressure to some extent can be cushioned. But that again will be a floating kind of a rate. It will not be a fixed rate like we like to this thing. And I wanted that as another option to normal fixed annuity. Under that circumstances, if people still like that I want a fixed guarantee even at 6%, that is fine for me. I do not want any variation. It's good. Otherwise, if somebody says that no, I want it inflation linked, let them go and choose inflation. But that product is not available today. So basically, IRDA has to bring that product. So we have requested them once again. And we have written to them also. Can we think about this?
You have earlier talked about setting up a separate fund or separate trust for private sector funds. So, what was the need for that, and when will that be launched?
That APY trust that we talked about, or separate trust we talked about, that was a part of our act amendment. Many other things were there, and that was part of that, because at the time government was thinking that if it is trust is really separated from PFRDA, and PFRDA no more remains the settler, and government takes over the settler job, then why not there be different trusts? One for government employees, one maybe for non-government, one for APY and all that. But that, as I said, the amendment thing is still not finalized. So till that is finalized, we have to wait for that. And for your information, today APY number is substantial. Almost, if you look at the number of subscribers, active subscribers, that will be more than 4 crore 33, 34 lakhs. That is not a small number. But if you look at the corpus is not that low. Corpus will be about 25 to 30,000. So that is not a large corpus vis-a-vis the total corpus that we do. So as of now, maybe there is no need, but when the trust is separated and it is thought of in little detail, maybe those things will all come in place. But as of now, the same trust is managing that, and we are not finding any difficulty.
And are there plans to raise the cap for equity investment for government sector employees to 5% from 50% now, in line with private sector?
Our suggestion is already with them. So government has to take the final call, because sometimes government also feels maybe for the right reason that too much of equity sometimes become too risky. And if people without proper understanding, they come and do it, and because of the huge volatility in the equity market, if they suffer loss to that extent, so that may not be right. So it is better to play safe. But in 2019, government brought in other options also, like 50% equity in life cycle fund, or 25% equity in life cycle funds, and 100% G6. So these three additional options were given in 2019. Earlier, only before 2019, it was only that same default fund which was allowed to everybody, and they never had a choice. So now that these options are given, so we are also requesting the government that please look into it. And if young people who are joining today, and they are quite savvy about these things, they want to take an exposure, you let them take, because our long-term equity returns are at least close to 3.5% more than our corporate bond return. So, and it is proved in every circumstances over a long period of time, equity always beats other investment class. So that is a sort of a considered risk that they have to take and decide for government employees. But our request will always be there with them to do it.
How many organizations which are not mandatorily required to join EPF have shifted to NPS?
There'll be so about 60, little over 60 central public sector enterprises, they have shifted to us. And those who are not mandatorily required to join, what happens, Mr. Dhasmana? Actually, they feel that the EPFO is going on for quite some time. Let us be with EPFO, even they are not mandatorily required to do so. So they are continuing with them. So that exact number will not be there, but corporates, a large number of corporates have joined us. But basically the employees are coming on voluntary basis, and even if PF benefits are there in those organizations, they are adding NPS also to their retirement benefits. So they are coming and joining on voluntary basis. But that number, what you are asking, that those who are not mandatorily under this thing, that data is not immediately available with us.
Going back to a minimum assured return scheme, will that product help state governments assuage their employees, which who are forcing the state governments to go back to old pension system?
I am telling it is very difficult to say what will be their view on that. Let the product be out in the market and thereafter we'll get the opinion. But I really do not know at this point of time whether.
Okay. And sir, what happens to the fund which of the states who have shifted to OPS, but what happened to their NPS funds?
What we stated, and it came out in the papers also, as per our regulations, we cannot part away with the existing contribution which was made and which has accumulated and lying with us back to the state government under any circumstances. Because our regulations are very clear under what circumstances we can give it back. One is premature retirement, one is death, and one is obviously the exit, which is at 60 years of age. So these three circumstances only we can give the money back, and that too to the individual.
Okay.
Once the money comes, somebody cannot claim that this is my employer's share, you give it back to me. Because it has become an individual account.
Okay.
Because it is for the benefit of all the individual employees. And you have seen what Madam Finance Minister also has stated very clearly. These are the property of the employees. And actually, she has quoted our act and our regulations, exit regulations. So, as per that, we cannot give it back, and it is still lying with us.
Thank you, sir.
Thank you, Mr. Singh.
Thank you so much, sir. It has been a pleasure. We have learned a lot about the various initiatives of PFRDA, and I'm sure our viewers will also gain a lot from viewing this interaction. Thank you so much and have a good day.